Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday with Dr. Friday's Tax and Financial Firm in Brentwood, Tennessee. She is a tax expert when it comes to individuals and small business owners. And this is one of the things I want to encourage you. If you've got someone helping you with your taxes, I encourage you to meet with them more than just at tax time. And all right, yes. Hopefully they're going to help with tax strategies, tax planning, ways that you can improve basically improve your tax picture. And that means, of course, paying less tax. We certainly don't want to be paying more taxes than we're legally required to pay. And understanding the rules and how to utilize those rules, they're just like we were sharing with the earlier strategy about the odd-even strategy, right? Ways that you can every other year, that is, reduce your taxes more by following this kind of strategy, which basically reduces your taxes over your lifetime, doesn't it? It's not just what you make, it's what you keep, and keeping more of your hard-earned money and not just throwing it away because of not understanding these rules is so important. So don't just go in and just, get my taxes done. Okay, yay, we're done, and that's it. How much money did you maybe leave on the table through not having good strategies? And it goes into the same when you're doing your planning for retirement. When we talk about Roth conversion strategies, tax-efficient investing, tax-efficient income when it comes to retirement, all of these strategies play together as ways to help you reduce your taxes over your lifetime. We're talking tens, maybe even hundreds of thousands of dollars, right, that you get to keep, rather than wastefully just sending them out to the IRS.
And I do want to jump in,
IRS is not a charity here.
He doesn't actually brag on himself very often, but the fact is, one of the great things I think working with Hank in the last 20 years is that he does include me in many of those conversations. So sometimes he has a bigger plan. As a tax person, when you walk in my office in January, February, March, April, whatever, for me to prepare your taxes, my goal is really for you to pay the least amount of taxes as possible now. Instant gratification. That's what we're trained really to do. So then when you work with someone, your financial planner or whatever, they've got a bigger picture. They've got a lifestyle plan or a 5-year or whatever it might be your person works with. He may say today, we want to do a Roth instead of a standard IRA. He may say that we want to do a conversion, knowing that it's going to have some tax dollars that he's prepared you for. These are really important questions because in the long run, he may be saving you tens of thousands, like he said, of dollars, whereas a tax person, my goal is not to, I don't know, I don't deal with that aspect. All I have is your forms in front of me, and the only thing I can say is, hey, we can accelerate this, we could contribute to this, are these going to work for you this year? And then your tax person has a completely different plan, and you need those, your financial planner and your tax person, on the same exact plan. And he offers a great deal for people to come in and talk to you about.
So in fact, we'll offer it up right now. And this goes to like Roth strategy. Sometimes we pay a little more tax, right, in this year, all right, for the benefit of paying a lot less tax over our lifetime or over the next 5, 10 years or more. And it's also, how about we think in terms of tax planning with estate planning as well? So with estate planning, we're looking not just at your lifetime, but we're looking, of course, at your beneficiaries too, right? What you want to have happen with your children and grandchildren. Maybe charitable, how that can work into minimizing taxes, and where more of those dollars, again, are going either to stay in your family or go to your charity as opposed to going out to the IRS. So if these are things that interest you, here's what you can do. You can call my office. Now, if you've got someone, by the way, if you've got a good tax advisor, if you've got a good financial advisor, hopefully these kinds of conversations we're having with you each week help you when you work with them in improving your situation. If you don't have someone, then I encourage you to call my office. The number is 615-376-5325. Also, if you'd like to maybe compare and see, am I doing all the right things? Can you look at my plan and see how it is? 615-376-5325. Tessa's standing by. She'll get your information. She'll send you out a checklist of things to bring to your appointment with me. We will do up a comprehensive financial plan. It's not just a free consultation. You're welcome to call. If you've just got some questions and you want to email me or you want to call me, we'll get you that information as well. We can do that. But if you'd like to get a full comprehensive plan where we look at your investments, we stress test your portfolio to see how it's going to do in the next bear market. We show things that have worked over the last 10 years, how over the next 10 years, that's going to be a whole different environment, and understanding that and how to position yourself to benefit from it and to protect yourself against downturns. All of that is a part of the planning. We talk about Social Security, about Medicare, all the different areas that you're going to have to deal with. Of course, tax planning, estate planning, all of this is a part of the comprehensive plan that we'll do up for you. And any kind of concerns you have, come in and give us what your major concerns are. We'll address those with you and share strategies with you to help improve that financial future. So again, this kind of planning, I can show you exactly what your financial future is going to be in the next 5, 10, 15, 20 or more years, and then share strategies with you to help improve that financial plan, to help improve that financial picture so that you have the financial future you want, to be able to attain and maintain your standard of living and quality of life no matter how long you live, not have to worry about running out of money. And when you come in, again, we work as a team, so I can bring Friday in, I can bring estate planning attorneys in. We can bring in resources to help in this planning, and that's what we do with all my clients. So again, 615-376-5325. Tessa's standing by. She'll get your information. She'll send you out a checklist of things to bring to your appointment with me. And when you come in to see me, I'll give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. And you know, that's what it's all about, right? Financial freedom. We want to be able to do the things we want to do, to have fun in retirement. It's not about, you know, I have people sometimes when they're filling out paperwork or, you know, going over their expenses and they're filling out the lifestyle expense worksheet we provide them. They're saying,
no fun.
I can get by.
No fun.
You know, oh, we can get by here. We can cut this expense. We can get by this way. They go automatically into this budgeting. How can we save money? That's not what this is about. This isn't about getting by. It's not about just surviving in retirement. It's about thriving. It's about having fun. It's about doing all the things that you want, checking off that bucket list, right? Making the most of those retirement years. That's what we're trying to do. We're trying to identify the financial lifestyle that you either have or would even and want to attain to even more, right? Want to aspire to even make it better. I want to travel more. I want to have more leisure time activities that I enjoy now that I've got the time to make the most of those.
Grandbabies. That's a big part of those conversations I have. Grandbabies.
Yeah, what to do there, right? Some things that you can help them, that you can do fun things with them. So all of that is part of the planning. So take advantage of that. And again, if you know, we can bring Dr. Friday in to meet with us as well and go over that tax piece as we were just talking about. So we develop tax strategies, and then we talk about how to implement those strategies, and then we run tax returns. We say, okay, here's what your tax return is going to look like if we do these things. And does that fit with what we want to do? So all of that is a part of it. All right, back to this program I want to get into with you. Check your withholding amount. So we talked a little bit about this before the break. Be sure you're having the right amount withheld. And then keep checking as the IRS believes further changes to the withholding tables may happen this year. And just look at it. Here's another thing I would encourage you on that. Rather than just try to figure it out, see your tax person, all right? And again, if you don't have someone, you know, give our office a call. We'll get you set up with Dr. Friday, and she can help you in determining those things too, to see what your withholding is and do the projections of what that's going to look like for you. Look like, easy for me, right?
Exactly. He talks for a living.
You would never know it. Looks like for you when it comes tax time. So there's no surprises. Everything we do is about, that's a benefit of planning.
That's it.
Is now we're saying, this is where I want to, you know, go from point A to point B here, right? How do I get there? Well, we measure where you're at now. We do the projections, and we can determine what you're going to need to do differently potentially to get where you want to be, and then we set in place a plan and strategies to attain that goal. I mean, it's pretty simple, right? Seemingly.
Simple for him. That's why we need, and that's why I love that team effect that you put together, because the fact is, I mean, associating with Hank for 20 plus years, I know a little bit to be dangerous. Same thing with attorneys, estate planning, all that. But it's not my expertise, and I have no wish to make it my expertise. I love taxes, and that way you have these 3 or 4 people on your team that really are very good at their particular thing. That's why I do have, in my opinion, you don't want someone that does it all. Because I think it'd be very hard, because they're either relying a lot on software, basically
Right.
saying, I'm throwing these numbers in here and here's what they say, but they don't really know where the numbers came from because they're just kind of putting them in there. They don't understand it, you know?
Yeah, and we're talking about experts, and one of the reasons you become an expert in a given area, and I cover a lot of things that I have general knowledge about, and in certain things, like when it comes to retirement, there are certain strategies, there are certain skill sets and knowledge that you have to do that kind of planning. So you have to understand, like, red flags get triggered. So if I have something that I see on a tax basis, this past week, I'll give you an example. I had a client come in and they've got, I think it's somewhere around 150,000 in net unrealized appreciation. So what that means basically is when I'm looking at their 401k, I notice that they have some company stock. I'm like, oh, you got company stock, and you know, then we get into a conversation, and we'll call the 401k custodian and find out, well, what's the cost basis on this company stock within this 401k plan? And we determine it's got about 150,000 of gain in that 401k company stock. Well, that's a tremendous benefit potentially. We can reduce and maybe even eliminate tax on $150,000 if done correctly when we're rolling that 401k. Is about to retire. So we're going to move in the 401k into an IRA. There are certain rules. Now we can move this stock into a brokerage account, and there are certain tax implications. So again, this isn't a do-it-yourself workshop. This has got to be done exactly right, or you blow it. Yeah. Okay, but knowing. And I've got, you know, so with Dr. Friday, I work with her. With the custodians, we work with them. I've got other tax attorney specialists that work specifically in NUA, and we get all these guidance. And I know, up there it is, and I know up 150,000. I can move this into a brokerage account. I can transfer the rest into the IRA. I follow the rules very strictly. It all has to be done in that year. No other withdrawals can be made. There's a lot of different gotchas you got to be careful with.
Done right.
But when done right, exactly. Now I can start. I get it in the brokerage account, depending on their tax bracket. And in this situation, we've got some room to maneuver that's going to allow us to basically sell this stock out over the next few years and pay zero tax. So 150,000 that coming out of an IRA might have been taxed depending on when at ordinary income tax rates. So you could be talking about 8,000, 10,000 or more, right? Depending on your tax bracket. In fact, that's low. It'd be 20. You could be talking about $25,000 or more in taxes on that. Right. That's now going to be saved and no tax. So that's what I mean by understanding. So I know when I look and see something, you know, same thing with a Roth conversion. Oh, I'll crunch some general numbers, some, you know, estimations, and then from that I'll say, you know, we've got an opportunity here. And then I'll call Friday and say, hey, I need to run some tax returns to see how this is going to make sure this is not going to trigger an AMT or some other tax consequences that we're not sure of before we do it. And then what the implications might be for taxation of Social Security benefits. We weigh all of that, okay, before we implement the plan. And then that way we can tweak it and make sure that we're doing just the right amount to make it work. Same thing goes charitable contributions. We've got the client recently that we had the carry forward on the charitable.
Right.
She had a couple hundred, I think it was, a couple 100,000 had been from doing a land trust thing. And that was money that we could now do a Roth conversions on and reduce, minimize taxes, almost eliminate them in doing these conversions, turning now tax-deferred accounts into tax-free accounts. There's so many strategies, right? It's so much fun.
Each person is different, and that's what's, I mean, you just heard, I mean, so many different scenarios in the same kind of planning, but everybody has to have their own plan, their own steps.
That's it. So, all right, we're going to take another break. When we come back, we're going to be talking some more back into the tax law, but also interspersed, we're going to throw some of these tax strategies. So, you know, again, pen and paper, right? Be ready. And these are things you want to talk to your tax person about, your financial advisor about. And again, if you don't have someone that does this kind of thing, we'll give you an opportunity to get a hold of us to help with that as well. But first, a break. Join us here. We'll be right back on the Retirement Report.